Hey everyone, I'm Ryan Tanel, and we are live with Real Estate Investing Live. This is a place where you can learn about how to invest in real estate completely passively from experts and pros across the US. And if you guys want more information, go to topproducerinvestmentcapital.com, request an invitation, and we'll tell you more about it. Today, we're talking with Jonathan Wei. He's got an incredible story about how he got started investing in real estate. He's also a CPA, owns over 2,300 doors, and has an incredible story. So, Jonathan, thank you so much for being on, and would love to hear everything that you're working on.
Oh yeah, great. Thank you, Ryan. Appreciate your time and honor to be on your show. For me, I have done many deals and I played many different roles, and I can share a story or two that I've been through that I think your honest way will like. Um, Basically, if so for my first deal that I've done, it was a 56 unit OKC deal, which is 3 hours north where I live in Dallas, and it was my first deal where initially, I thought because in a lot of programs I have taken to learn mentorship, we were taught to how to find a deal, how to raise the money, and also how to do DD and close the deal. But what was never really mentioned after was how do you manage a deal afterwards. So there's a big omission of that, and I had no idea. And then so what happened was when we closed, I just let it go by naturally for three months or so, and then I realized, wait, I can't. Wait a minute. I said, wait a minute. I have to put some kind of process to kind of monitor this because if you don't look at it or don't look at your property, you can't. It's not passive investment, right, for an operator.
Absolutely.
So I learned that kind of in a way, in a hard way, because I learned that basically the manager I hired, secretly um, con- contracted the person who's a previous partner who lived on site, and I didn't want her to be my property manager, but she secretly did it behind my back.
Mm.
So when I went there and I looked at it and I talked to her, and that's what happened, and that's how I found out that I needed to watch it more carefully, put a process in place, and hire a good manager. So I had to fire that property manager. I had to bring on a new manager to straighten it out, and then we tested that lady. So we said it was okay. Here's exactly what I want you to do, and we'll give you like a rent credit or reduce your rent if you do these. And what we found out was she was playing a lot of games with us. She was saying, I can't pay the rent because I have behind car payments. I broke up with my boyfriend, and she started crying to me in front, the weeping story to me. So then my property manager said, no, Jonathan, she's not. You have to let her go because she's not really doing her job. And she
Mm.
wasn't managing. She was doing like cleaning up the yard or some basic tasks, pick up the garbage. Then I said we have to evict her because she's basically not truthful, not being good faith to us, and give me a lot of sob stories and behind her car bills and everything else from her mom and everything else. So I'm like, no, we have to get rid of this lady.
Hmm.
I try to be a good person and try to help, but in the beginning I felt bad for her. I want to help her, but I think she was taking advantage of me being too nice, basically.
Yeah. Well, I tell you, I've had a similar story. I mean, I grew up with, good parents that taught me good values, do the right thing, be nice, help others out. And so that's kind of how you do it. And,
Yeah.
when you're the landlord, you have a lot of power over someone's life, where they
Hmm.
live, the
Hmm.
quality of their lifestyle and their finances, to evict them, to force them to pay rent, to put late penalties on them. And it's tough to kind of have to make that decision in your head. Hey, what's the right thing to do here? On one hand, you've got someone's life, but on the other hand, you're running it like a business, and you kind of have to just draw the line. And, I know
Yeah.
you can expand on how much you've learned probably since that first experience. I've learned on my end. I have to set a lot of these rules up front before we, bring residents in and say, just so you know, I treat this like a business. Here are the rules. If you break these rules, here's what's going to happen. If you're going to have some problems, let me know ahead of time. We can work something out. But if you don't let me know ahead of time and you just don't pay, here's what's going to happen. So yeah.
Yeah. Yeah. So then I spoke to my property manager. There are very strict rules on after fifth day to put late notice.
Hmm.
And after that you can go to court because you didn't pay. So we do a every weekly local asset manager meeting,
Hmm.
and we identify who are the ones who are giving us, or the bad tenants who's giving us problems,
Hmm.
and who are the ones who's really struggling, who needs a payment plan.
Hmm.
So then we tailor to the people who we think are just playing games and need to be evicted right away. And it's people who are seriously maybe disabled or temporary out of a job but found another job and show us evidence of that, then we give them a chance to make a payment plan and stay in the apartment. So we do what I call analysis every week, and then I make a decision who to. My partner will know who they are and they will let me know we're a victim. I agree.
Mhm.
On some cases where it's kind of like iffy, then she'll ask for what I want to do, basically.
Yeah. So when you're doing these weekly calls, and I know you kind of touched on it there, what are some of the, KPIs or some of the metrics, or what are the things that draw your attention on, hey, things are going well, or hey, this is something that we need to make an adjustment on?
So the things that we ask is the first question asked is any major issues this week,
Mhm.
and generally is no. If it is yes, is we go deeper and much deeper into that.
Mhm.
And normally this is before the meet because if it's right away, I would know the same day. Then the second item is how many new tenants and where did they come from? So was
Mhm.
it from apartments.com? Was it from Facebook, Zillow? I need to know exactly those metrics so I can see it's my dollar spent on marketing makes sense because
Mhm.
apartments.com is really expensive. So you
Mhm.
don't want to use that unless it's really like a nice apartment or something that you really need that attention. So mine was a class C and I really didn't need that unless I needed to release up really fast or it would help us. Um, then some of the question I have was what's your current work order? Any lease renewals? Who's on the eviction list? Who did not pay? Who's promised to pay? So all these questions we ask, we have a Word document where it's all the questions and she has to fill it out. She has to be prepared to be on the toes and answer all the questions and give me our reports.
Mhm.
And then I question her on these with my team to make sure that she's being truthful and she's has her best interest in mind. Otherwise, we'll talk to the boss and say this lady's not doing her job, the on-site manager, because I do some surprise visits. I drove up there 3 hours. I'll go there every like few weeks.
Mhm.
I have cameras installed myself, so I have access to the cameras, and I can see if that she did it or not just through the cameras.
Mhm.
Um, so over time, you know that the lady is she's actually doing her job, or she's just like, man, so so. And if she's
Mhm.
so so, that's when you got to talk to the regional, the boss, or the owner, and say, listen, we have an issue with this person, this lady or man is not performing the way she's supposed to, and we want to switch out the on-site manager, basically.
Yeah. So that was you said that was your first one, 56 units in OKC? And
Yes.
then, you've gotten up to 2,300 or so units now. I'm curious, what's been your trajectory, and I wanna say you started, was it 2018? Or no, sorry, 2003?
Well, 2003 was my residential. I was
Mhm.
like single family and condos in
Mhm.
New Jersey where I grew up, and then I joined a mentorship program, and I did multifamily in OKC where I started, and
Mhm.
I've got a couple of buildings in OKC. Then I went to the 72 units, and I went and some other units, but basically I scaled out, and that's how I got to this level. And
Mhm.
I also had partners help me through raising equity or finding deals, or my mentor, need assistance to help my mentor, and
Yeah.
we help each other out basically.
So I know you're very big on, building out a team and having a strong mindset. And so I'm curious to hear your mindset when you started getting into the multifamily side as you were learning what the deals were like then, and then how that's shifted, through COVID, through interest rates going down and up and into where we are now, and what you see your mentality about doing investing in real estate now versus back then.
Yeah, I think if you're a new student trying to acquire multifamily, I think it's a good time to come in now because now I think there's a golden opportunity where in a few months or so you're going to see a lot of distressed assets,
Mm-hmm.
and more of
We're
that
already
coming
seeing it.
along. Yeah,
We're
you're
seeing
you're
some.
seeing it. Yeah, I've
Hmm.
seen some too, but you're gonna see more of that because they've been too aggressive in the past 2 3 years,
Hmm.
and I think it's a good opportunity for students to come in and buy their first deal. So that's one thing I see, and I see that it's a good cycle for that. So there's a great time to for my students. I have like 10 students, and they it's a good time for them to actually underwrite and acquire deals.
Yeah. And what kind of deals are you having your students look at and acquire? Are you doing value add, or what kind of classification are you looking into?
Well, it's up to them. It's to be their deal. They can choose Class C or Class B or Class A, but normally choose a Class C. Like 60 or 70 or something.
Hmm.
Value add. It's on the smaller side because it's first deal. They can't raise
Hmm.
that much equity, so maybe 30, 40 units or 50 units, 20 units like that, depending on under how much you can raise or the partnership or the equity and the family and friends. Um, so they're doing those smaller deals, and like today, I had a call and I encouraged them to go look at a couple of deals, and I helped them actually arrange some intro meetings that I use in OKC. I said, go talk to this property manager, go talk to this broker I used. I'm here to assist you as a mentor to give you those connections so you can actually thrive and grow in this platform, basically.
Yeah. And with students getting in and looking for these deals, I guess who are they buying for? Are these typically mom and pop sellers? Are these people that are going through financial distress that got bridge loans? I guess where are you having students finding opportunity of good deals?
I think it's just for them. I want them to just reach out, build connection with the brokers,
Hmm.
and see what they can give them. Hopefully, off-market deals, but let's see what they give them. And I want them to underwrite a lot of deals to get the sense of the local market. And once
Hmm.
that makes sense to them and they feel comfortable with it, and I agree with it, they can move forward and submit an LOI. So it could be situations where the partnership dispute. It could have been a mom and pop over many years, may do seller financing. It could be a bridge debt that's due. So what the
Hmm.
situation is, it has to be some kind of a reason why they're selling and that to give you a good price. So some kind of distress level, partnership dispute, divorce, anything that you can get a good deal on. That's what they have to chase after.
Yeah. Are you open to talking about like the most recent deal that you've done and where you found it and what it looked like?
Yeah, yeah, sure. The most recent deal that I done was self storage. It was in a small little town in Chino Valley, and that's basically a storage play where the owner is supposedly like semi-retired, and I got a self-finance of 4.75% interest rate, so it's very low.
Mm,
I got a low rate. For now, it's really high. Like local banks, 8% or something,
mm,
9%.
mhm.
Um, and the story was the owner for like 15 years, and he wanted to retire and have a boat and just go to North Carolina. One of the
That's a
partners.
that's a similar we've heard a lot of those stories. That's usually who we buy from too.
Yeah, yeah.
Mhm,
So that's one partner. The other partner just want to continue. So there's a little dispute between those two partners.
mhm,
The other partner won because he's more like it seemed like he can argue better or something.
mhm,
Um, so in that situation, I was able to acquire at it, and then we acquired seller financing. There's no loan from
mm,
anyone besides the owner,
mhm,
and yeah, so it's a very it's high demand area, and we've been continuing to kind of we have the best A team in the boots on the ground asset manager. We have a very good system set up because we know how to do storages.
mhm,
Now it's just that because interest is so high, it kind of softened the demand for home sales.
mhm,
So it's kind of challenging in the self storage industry. So we're
mhm,
hoping that they lower the rates, soon, so that the economy can pick up again,
mhm,
and that we can get more home sales activity, more movement, for
mhm.
more higher demand and storage. So that's kind of the challenges now in the macro environment.
And for your storage deal, how did you I guess what were some of the metrics that you looked at to tell you if it was a good deal or not? I mean, do you just go off of the price that you're buying it at? Do you look at internal rate of return, cash on cash return? How do you calculate, hey, this is a good deal or not?
Right, good. That's a good question. We do a lot of underwriting. I have a customized underwriting tool that I do for self storage. We hire also a third party advisor that's an expert in 20 years of self storage. Gives me a what they call feasibility study,
Mhm,
which means that they look at the market, the supply, demand, and any new developments, and tell me an opinion, favorable or unfavorable, and why he thinks I should buy or not buy. And I
mm,
always get that confirmation before I move forward. And I also do my own due DD, and I hired experts to come in and do a physical DD.
mhm,
I look for it myself based on my own experience and knowing the area and knowing the prices. It was a good deal. It was a good
mhm,
deal for that one, and the low is a very low interest rate, so it was a
mhm.
good deal.
And are you doing this deal? Is this your own money? Do you raise capital from limited partners? How are you structuring the equity side?
I normally do a syndication is what I've been taught. So I do syndication for my deals. I haven't done JVs.
Mhm,
So basically, I do syndication. I raise equity from retail investors, which means individuals, retail, family and
mhm,
friends, and things like that. I don't do institutional capital because I don't like the terms and controls. Sometimes
mm,
they put on it restrictions. So I just try to do retail because that's more easiest way to get capital in my view.
mhm. Gotcha. Okay.
Mhm.
And then, the limited partners or the retail investors that they're coming in, whether it's for storage, multifamily, or whatever they're seeing out there. I'm
Mhm.
curious, is there a common theme between the types of questions that they got? How's their appetite? Are they familiar with real estate investing in general, especially in these multi-unit deals? Or, what's kind of the things that limited partner investors are interested in these days?
I think as long as you can have a good presentation and deck and you explain it well, and you show 'em at least you said you have a track record, you demonstrate case studies, they will be interested in investing
Hmm.
because they believe that it's a good deal, they believe in you, and they get good returns. So, like for example, my first storage deal was a very interesting story. We found out with my partner in 2020 in the heart of coronavirus, COVID-19. And my friend was very frustrated because multifamily was too hot. He couldn't find no deals, so he went to self storage.
Hmm.
And what happened was he said, "I need help because I don't know much about storage, and I need help raising equity because he had no idea." And I'm like, he was stuck basically. And I was a senior guy. I had raised equity. I had my connections. And when the story was, the owner was a mom and pop. He passed away. He kept it in Texas clean. He was like a very beautiful property, very clean. And he said, and his son don't want to run the self storage, so he sold it for a pretty good price at the time. And my friend underwritten it, and it did well. And I looked at it myself, and I said, you know what, this is a great deal. I think you should go buy it. Then he said, I need your help because I don't know how to analyze it. I don't know how to raise the equity. I'm like, oh, okay. So you basically need me like almost like a mentor or like a KP or something like that.
Hmm.
And I was like, okay. I mean, if this is a good deal, I want obviously some equity to help you
Hmm.
as a KP, a mentor, and then I'll help you raise the equity too. So it's equity raising equity. So we agreed upon the equity split, and I helped him raise. I did one webinar. We raised most of probably most like half most of what he needed remaining,
Hmm.
and then he used techniques to lease it up, which I'm happy they did.
Hmm.
And we were at 90% occupancy for most of the 3 years that we held it for. And he just told me that like I just got my check yesterday. He sold it. We sold it, and we made investor 2 point I think 5x in
On
three
their money
years.
in 3 years.
In three
It's
years, yeah,
incredible. That's
yeah,
a great
yeah,
return, higher than
yes,
this. I mean, the stock market typically returns, 8 to 12%. That's what, in the 20s or 30% rate of return on your
yeah,
money, double it two
yeah,
and a half times your money in 3 years. It's excellent.
yeah. So it's a really great deal. He bought at a great price at a great. Unfortunately, that circumstance where he passed away, it was sad, but that's happens. Like happens like that. His
Hmm.
son didn't want it, and that was a true story of how a mom and pop had a very beautiful facility, very like no deferred maintenance, beautiful. Yeah, you fall in love with it, and then just simply management operations play, do it well, lease it up, keep them happy, and then we sold it for way more than what we expected,
Hmm.
and I'm very happy when I got my check because it's a very big check when I got it, so I was very happy.
Yeah. Well, I bet if you had retail investors along for the ride, they were probably pretty happy as well to get those checks too. So
Yeah, one's like texting me saying, "I want to. When's your next deal?" So
that's what I was gonna say. I mean, when they get that check back, maybe it's burning a hole in their pocket and they want to do, but more than likely they probably want to just put it back in and say, "Hey, let's like double up again. When can I get into the next one?" So
right, right. So I said, "Well, we're looking for the next deal. It's not easy to find a diamond in the rough these days. So I said, be
mhm.
patient.
Mhm.
When we do, we'll do a webinar, and I'm launching my new fund. So
Mhm.
my fund is focused on multifamily, the Greystone Fund, and it'd be distressed asset, mismanaged assets in Texas and Phoenix.
Mhm.
And when we first proceed, we'll launch the webinar show talking about my fund and our first offering, basically.
Awesome. And yeah, I'm curious if you're open to share, any details of the fund. Do you have any expectations for what investors could expect if they come into your fund, or what are some of the common things people would want to know?
Yeah, so for a passive investor, I'm conservative. I can say if you're a retail investor, you can see in 3 to 5 years of my exit anywhere from 1.8 to 2x. Normally, I do better, but past performance don't guarantee future success. So that's my
Yep,
disclaimer.
definitely.
Um, and if you are a fund manager, I can show how to set that up, and you could get more economic equity because I'm gonna give you more share of the equity versus just the individual investor.
And do you typically require accredited investors only for this?
Yeah, this is a 506C, which means an SEC that we can market, and we you have to be a high net worth individual.
Gotcha.
Mhm.
And do you have a minimum check size if somebody was interested in coming in?
Yeah, my minimum, because this is a $20 million fund, my minimum is 100,000 for per person,
hmm
506C, accredited investor. Either get a letter from your CPA or you go through third party to get accredited. And that's what we look for.
Cool. And how much are you guys raising in your fund?
We want to raise initially 20 million for a fund, and we want to acquire like around 3 deals, mostly in Texas, but it could be also we'll have a building in Phoenix as well, so we can leverage that as well.
Yeah, and then as far as timing goes, like you were saying, it's good to have that 20 million of capital, dry powder ready to deploy, because as these opportunities are coming up, people are in financial distress, they're wanting to retire. You can act very quickly if you have that cash just sitting on the sideline ready to either make cash offers on deals or get great terms on financing or close really quickly and beat out a lot of the competition that might need to move
Mhm.
their money around or might need to take slower options. So I think that's a great thing that you're doing, and you're in a position to be prepared to take great advantage of this opportunity cycle coming up.
Yeah, so that's why decided to do this fund model versus single asset I've been doing for the past 6 years. So I think it's a little more better for now.
Yeah. And is your fund, you said, are you guys targeting typically like value add properties or A, B, C class type of multifamily?
Yeah, ABC, workforce, value add, but we could also focus on student housing as well.
Okay.
If we
Yeah.
do. Yeah, yeah.
Okay. And like you said,
Because
these are just direct. Are you using your software to reach out to owners directly, using mostly through brokers?
my connection is mainly to brokers, and I have a lot of connections. If the owner knows me, I'll consider it, but I don't do direct mail campaign. I do mainly do broker relationships.
Yeah, I think we've bought one from a direct owner, one from a wholesaler, but then the rest have all been through brokers. They're just pounding the pavement every day, getting access and having conversations. And it's really a relationship business. These brokers have been in the business for a long time. They have all these relationships established. They're going to know pretty quickly who's a seller, who's a buyer, putting everyone together.
Hmm.
So I
Yeah,
think that's a good way to go.
I think they're the experts. I'm not a wholesaler. I don't know how to cold call, so I'm not good at that. So I rather leave it to them, build a relationship with them, and
Mm,
then they can do all the daily jobs of to hunt and find and call the owners and
yeah.
build a relationship. So yeah.
So out of the, you said you've got 2,300 units. Is that current active or some of those full cycle sold deals?
Yeah, we sold and now we sold 4 full cycle, and
Mhm,
all of them either met or exceeded, way exceeded like the returns. So
mhm.
we have a lot of happy investors, and now we're just waiting for the next deal. And so we're patiently rating and underwriting. We're touring every single week. And yeah, that's what we're doing right now.
Okay, and then so when you have this many units under management, and like you said, the first OKC deal, you had that weekly KPI call. We were talking about the metrics, what happened last week. When you've got this many units, talk me through what are those? Do you still do weekly calls with every single property? Do you have a team that helps handle that? How are you managing such a large portfolio?
Yeah, that's a great question. It's about systems, and it's called when I grew up as a tax professional, a CPA background, and I learned a great deal of what we call PPM, corporate governance and process, practices and management. That's what PPM. And what that means is kind of like the six Black Delta, Six Sigma. And what that means is basically you need to have a good team, an A team, the Avengers on your side to tackle these tasks for you because you can't run every single piece of yourself. So I have a great asset manager. I have a great on-site team. I have a great acquisitions person who just talk to brokers all day long, underwriting, and I have a great asset manager. I have a great property manager, and I have a great boots on the ground for self storage. So we
Mhm.
hire like retirees, and we have one in Wimberley near you, Austin Hill Country.
Yeah. Yeah.
And he's 70 years old. And he goes there like maybe twice a week and just sweeps the floors and look at the units and does clean outs. And he's a great asset. So we hire great people, and we embolden, we give them the trust. We give them the room to grow, just like Tesla, Elon Musk. You give them the room to grow and give them traction under the EOS system. So if you're the
Mhm.
CEO Elon Musk, you have to gain traction. How? You have to embolden and trust your people, and to run the show for your asset manager, just that, and then you have calls, you have weekly touch bases to make sure that it's going along track. That's all.
Definitely. Well, hey, we've got a comment from someone who wants to know. Their question is, how do you know if this is a good or a bad syndication? How do you know if they're going to do capital calls in the future? I mean, you've seen a lot of offering memorandums. Obviously, you put those out. What's your take on how do you evaluate a sponsor and a syndication offering?
Right. So that's a good question. Okay, first let's first go back to the history so you understand. There's two black swan events that happened in our lifetime. One was COVID-19, which no one knew, right? So me, you, right, anyone in this room would never knew that would happen. So that black swan event caused delinquency and collection issues. So it hurted everyone. So that's forces beyond our control. But you can manage in a way and get grants and relief from the government to help that, to maybe offset that. So there was challenges in that time period. Okay, that's number one. The second biggest black swan recently was the Federal Reserve interest 11 times in 18 months. So that's not a black swan event that happened to us. Plus the ice storm with the big insurance and the pipes breaking out. That's 2 years ago. So these factors also are beyond our control. So the pipe breaks, it costs a lot of money to fix, and you go through insurance, and unhappy tenants, they might move out. So I experienced that myself at OKC. So go back to your question. Basically, is sometimes it's beyond your control, and things will happen, and it's up to the operator, and the integrity and the honesty and the communication, and to see them through, how they fix it, how they go through this period, and how they communicate and bring it back up to stabilization. Now, if you're a good sponsor, but you didn't see like this 11-time rate increase, you took a bridge loan, well, then you're in trouble. And he might be a good sponsor, he be doing the right things for you. He's not lying to you. It's just he didn't know because of the black swan event. Like no one would know that. So
Well, I
what
guess
happens is, yeah.
I was guess yeah, like the question is, if you're a limited partner and let's say you're brand new to real estate investing, there's a bunch of good looking sponsors out there. They all look like they know what they're doing. How do you pick
Yeah.
who's legitimate, who's going to be a good operator, and who's a fraud or doesn't know what they're doing or is going to make a bunch more mistakes? How do you decipher and sift through all that?
Oh yeah. Oh yeah. So you have to do your due diligence.
Hmm.
I would recommend just have coffee or lunch with the lead sponsor and team. So lead sponsor, if you're a lead sponsor, Ryan, have coffee with you.
Hmm.
Get to know you as friends first, and make sure your values align. So are you an honest person? Are you relatable? Do they like you, trust you? That's first premises. So you don't invest until you see who you are. That's most important, is ethics. Because most you don't have ethics and you're just taking your money. That's not right. Like Bernie Madoff. So the second thing is look at the track record.
Hmm.
Now if he's brand new, then is it more higher risk? Like
Hmm.
is it your first deal? Then as an LP, you have a higher risk. So you have to know Ryan very well, like almost your
Hmm.
best buddy. That's how close you should know him, right? Then the other third thing is see how he communicates on a sample email if you haven't done so, or listen to his podcast, listen to shows, see what his style is and what is his true nature and what's his intent. And if you like him, know him, and trust him, then you can give him a bet on him, especially
Hmm.
he's new. But for me, who's done it for a long time now, I can show you my track record. I can show you my past emails, what I sent to my investors. I can show you everything you need to know. And any question you have, I respond within the same day to my
Hmm.
investor.
Yeah.
So yeah, so that's what I would recommend you do.
I mean, I think those are great tips. I know a lot of times limited partners ask me that same question, and like, I'll tell them, hey, obviously, I'd love for you to invest in my deals, but when I'm evaluating other sponsors, typically I'll look at as many as I can, maybe 20 to 30 different offerings from different sponsors and kind of pick and contrast who looks professional, who looks like they spent time on their presentation, who is using more salesy words like exciting and great and opportunity versus data of, hey, here are the 3 closest sales comparables. Here's the dollar per square foot that they sold at. Here's the dollar per square foot that they're renting at. Here's the demographics of how many people are moving here. Data really can tell a much better story than just a sales pitch or something. And, granted, if you haven't done a lot of real estate investing and you, especially in multifamily, you don't, even if they tell you the data, you might not know which data is important to look at, or just because they tell you some number, you may or may not know. But at least if they have the data, you can take that same offering memorandum and you can send it to 5 or 10 other sponsors and say, hey, here's what I'm looking at. Can you critique this? Can you tell me what questions I need to ask the sponsor that I might not know myself? But you give me the ammunition, the questions to ask, and you can see that sponsor have good answers to those. Do they kind of falter under pressure? And maybe have someone else get on a phone call with you and say, hey, let's have a collective Zoom or a coffee and have somebody else grill that sponsor for you. And just kind of see how they stand up. Because it's hard if you don't do a lot of real estate investing yourself and you haven't looked at a ton of these, you're not going to have the experience. But that's how you get it, is piggybacking off of someone else's experience. And then once you've done 1 or 2 of these 3 deals yourself, you will know the questions to ask.
Right. And I give a free on my website a due diligence checklist, how to vet sponsors. So I go through all those in my website for anyone who's new, guided passive investing in syndication as well.
Yeah, and Jonathan's got an entire course. You're a mentor yourself. If people are really interested in getting into this full time, either as a general partner or a big limited partner, they can, come on your course. So I would hope you talk a little about like, hey, how can people join if they're serious about becoming either a limited partner or a general partner?
Yeah, so my course is a designated focus on people who are interested. Okay, yeah, basic my course right now is how you raise capital from other people. That's my course. I'm teaching how people who struggle in raising capital. So if you're interested in raising capital, I can help you overcome your limiting beliefs, your mindset, strategies, how you scale, how you nurture the leads, and how you create a successful business, and you can be the fund manager. That's what my mentoring program is about. Now, if you're a passive investor wants to invest in deals, I can give you advice, show you deals and stuff like that. I'm free resource on my website, and I can help you through that way as well. So.
And what's your either Instagram or your website? Where can people reach out to you?
GreystoneCapGroup.com.
Excellent. Do you have an Instagram?
I do. It's my name, Jonathan Wei.
Okay. Awesome.
Yeah.
Very cool. Well, hopefully that helps. So, I know we've kind of been going through quite a lot of stuff. Obviously, you've got a wealth of experience. We could talk for hours on this topic.
Yeah.
In addition to kind of what we've covered, is there anything else that you think people just need to know or limited partners need to be aware of if they're either coming into the game now or they're trying to navigate this turbulent time that we're going through?
Yeah, I think don't be so fearful. I know a lot of fear in the market. I know you're afraid. I know that you don't want to. Most people don't want to. Some people don't want to invest because they don't know what's going on. But I know from my experience that it's turning. They'll cut interest rate. They said 3 times what they told us, the Federal Reserve themselves. So what that means is it's going to be more stimulus to the economy, and there'll be more home sales and it's going to pick up again. So the cycle is right for you to actually come in and invest this year. Mm-hmm. It's the right timing. Yeah, it's actually the right timing. So don't be afraid. Don't be afraid. That's what I'm saying.
Yeah, absolutely. Yeah. Well, Jonathan, I know we're going to get into the top of the time here, so I appreciate you coming on so much. Like you said, GreystoneCapitalGroup.com. You got your Instagram at Jonathan Wei. Appreciate you coming on, and hope to see you around. Best of luck on all the deals and the fund that you're raising for.
Thank you very much. Have a great day.
All right. Okay. Take care.